Hello, welcome to our recording of the OPEB for Cash Basis Local Governments webinar. Deborah Burleson, our Assistant Audit Manager for the Local Government Support Team, will be providing you information regarding OPEB for Cash Basis Governments. Please let us know if you have any questions by submitting a help desk request to us, and we will assist you at any time. Take it away, Deb.
All right, thank you, Stacy, and welcome everyone to our webinar. For the 2019 reporting year, that's when you cash basis local governments are going to start reporting your OPEB liability on Schedule 9, the schedule of long-term liabilities. First of all, I want to refresh our memories a little bit. What exactly is OPEB? That's our acronym for Other Post-Employment Benefits. Pensions are the ultimate post-employment benefit, and then everything else is in other post-employment benefit. It's the post-employment health care benefits. That's probably the biggest thing you always think of. Medical, dental, vision, hearing, all that kind of stuff, whether it's provided through a pension plan or separately. Even if it's provided through a pension plan, you would value it separately from the pension liability. And there's also other types of benefits like death benefits, disability, life and long-term care insurance, anything else, when they're provided separately from a pension plan. I think a good example, someone asked me the other day, they said, we give bus passes every month to our retirees for the rest of their life. See, that's an other post-employment benefits. That's etc. on my list there. So anything like that, it could result in a liability. So what exactly is an OPEB liability, this liability you have to report? Well, it's the actuarial present value of projected benefit payments attributed to past employee service. And you're probably going, well, wait a minute. That's the same definition as a pension liability. Well, yeah, they're all post-employment benefits. So the accounting theory and criteria for all these types of benefits is exactly the same, whether it's pensions or OPEB. It's all a post-employment benefit. Of course, the number one question everybody's got is, do I provide OPEB? Now, in our state, the most common benefits are provided by through the PEBB plan. That's the state's Public Employees Benefits Board plan. That's the health care authority. That plan provides OPEB through the plan's explicit and implicit rate subsidies for the retirees. And also, as you LEOFF1 employers know, under state law, you're obligated for the lifetime medical expenses of your LEOFF1 retirees. Now, if you're uncertain about a plan, just contact us and we'll evaluate it. I'm particularly interested in LEOFF2, what you LEOFF2 employers do. So I'd really like to hear from you on that. I wanted to talk a little bit more about the PEBB plan, those explicit and implicit rate subsidies. I got some information here that I get it from the valuation, the PEBB valuation. The first one is there's an explicit rate subsidy. Now, for retirees who are Medicare retirees, so those 65 and older, they get a set dollar amount that lowers their monthly premium that they have to pay. And here's a chart, kind of goes from 2013 to 20. For a few years, it had been $150 a month. And you can see by 2020, it's been indexed for inflation, so it's up to $183 a month. Now, you don't pay that $183 a month. That's what they receive in a subsidy. For example, in like 2019, they were getting $168, and there were about 3 active employees to every 1 retiree. And so what they do is they were building into your rate structure for that year, it was $54.11. So out of the premium that you pay, that much goes towards the retirees. So see, that's an explicit rate subsidy. But this plan, PEBB, also has an implicit rate subsidy. We also call that the blended premium rate. This is because retirees are included in the same cost pool as active employees. Those are the ones that are under age 65. See, they have the same premium rates as active employees. So the rates for the active employees are actually subsidizing the rates for the retirees. that implicit rate subsidy is OPEB. It has to be included in your liability even if the retirees are paying 100% of their premiums. And I'll show you why. Now, if the retirees are rated separately from active employees and they pay 100%, see, then there wouldn't be any subsidy. That's actually the way the WCIF, that's the Washington Counties Insurance Fund, and AWC, the Association of Washington Cities, that's how their plans work. All the retirees, no matter what their age, they're rated in a separate pool. So if they're paying 100%, there's no subsidy. Let's see, in the state plan there is, and I've got a very good chart here, I think, that explains it. I took this, once again, I took it from the 2018 OPEB Actuarial Valuation Report. Now I want you to look at that horizontal black line there. That's the blended premium rate for active members and non-Medicare retired members. It's about $550 there. So that's what the employer pays, about $550 a month. But look at that gold dotted line. That's the average active claims cost by age. Now you can see when people are down in their 20s, even though you're paying $550 a month, they're only using about $100 a month in actual claims. You know, the occasional broken ankle while you're hang gliding, that kind of thing. But as people age, their claims costs go up. They use more medical care. And then you keep watching, it gets up to about 51, you can see kind of flips the other way. Even though you're still paying $550 a month, somebody who's about getting up near 65, they're probably using close to $750. See, the younger members are subsidizing older members. And that's the way an insurance pool works, and that's what this is. Those of us who didn't wreck our cars this year are subsidizing those who did. But that's the way insurance works. And you don't care if all these people are active employees, right? You're paying the same amount per head. That's just a cost of business. That's an employee benefit. But what if those people are retired? Look at that blue triangle there on the right. Those are the retired people between about 50 and 65. And you can see why, especially when they get up near 65, they're using about $850 a month in benefits. So even if they're paying 100% of their premium, even if they're paying the $550 a month, they're actually using like more than $800 in benefits. See, that's the OPEB. That's the implicit rate subsidy. Once again, the younger active members are subsidizing older retired members, so you're providing a benefit. So I know that's kind of confusing, but that's the implicit subsidy. Okay, so how do I get my OPEB liability so I can report it on Schedule 9? Well, if you participate in the PEBB program, or LEOFF1, the Office of the State Actuary is providing an online AMM valuation tool. This started back in 2009 with GASB 45. The state actuary does a valuation for the PEBB plan as a whole, and even though the state isn't a LEOFF1 employer, at the request of the legislature, for many years they had been doing a valuation of the LEOFF1 benefits, what was the liability. And the actuary said, I can take this tool, this valuation, and come up with tools that local governments can use to figure out their own portion of that liability. And so that's what they do. So they've been doing it for quite a few years now. Of course, you can only use those tools if you're a member of the PEBB program or a LEOFF1 employer. If you provide OPEB through any other plans, or maybe you're just not certain whether an arrangement is an OPEB plan, contact the SAO help desk for guidance, because we'll figure out, do you provide OPEB, do you have a liability, and we'll figure out how to calculate it. Now, you don't have to use these tools, first of all. You can do it yourself if you want to. When I say AMM, I mean alternative measurement method. It's a method that's allowed under accounting standards. There's only one way to get an idea of what your liability is. It's through an actuarial valuation. You can pay for a professional one, but if you have less than 100 plan members, you can do this do-it-yourself method, the alternative measurement method. There's actually an illustration in GASB 75 in the appendix. And you notice I don't say an alternative method. I say the alternative method because there is a specific way that accounting standards say to do this. I've actually tried doing it myself. You can see there's only, I think, 18 people in this example. It took me all afternoon to get through the first 9, but I did get the same answers. So I know I was doing it right. So it can be done, but boy, I'm thinking someone who has like 99 members, it would take quite a while. But if you want to do it, you can. I find that left one employers, sometimes they say to me, you know, these tools that the actuary has, they're based on statewide facts and assumptions. And some people say, well, especially for those left one employers that maybe only have 1 or 2 retirees left, they say, well, you know, mine's pretty specific. I feel like I get better results if I do my own valuation rather than using the tool. And that's fine. You can go either way. Now, where do you get these tools? You get them from the state actuary's website, OSA, not SAO. The actuary is actually a department of the legislature. They work for the legislature. So go to their website, and you see down there in the lower right-hand corner, it says OPEB Reports and Tools. Click on that. That will take you to their OPEB webpage. And you can see you can actually read the valuations, very interesting information for both PEB and LEOFF1. And then you get down into that third section, and there's the OPEB calculation tools for either PEB or LEOFF1. They're updated every year. So, you know, you use one that is specific to the year you're reporting. If you should ever happen to need an older tool, just contact them. Even though they take them off the site, they're still available for you to use. And that's actually what we're going to do here. We're going to run the tools, but first, I want you to rule the tools. Okay, so here's my tips. First of all, download them to your computer. That means save them to your computer before attempting to use them. I feel kind of bad, especially like the first year. I had someone call me just practically in tears. She said, you know, I've done this 3 days in a row. I put it all in. I come back the next day and it's all gone. Well, she was doing it online. You know, she was just doing it, and you can't save on the website, on the OSA website. So yeah, save it to your computer first, and then the stuff won't go away every time you close it. Once again, only PEB member employers can use the PEB tool, and only LEOFF1 employers can use the LEOFF1 tool. I know I've had people say, you know, my plan is PEB-like. It's very much like PEB, so can't I just use the PEB tool? And no, these tools are based on valuations that have facts and assumptions that are specific to those plans. And that's, you know, of course, what an actuarial valuation should be. It has to be specific to the plan. For your LEOFF1 employers, if you just happen to provide your LEOFF1 benefits through the PEB plan, the actuary tells me it's better to use the LEOFF1 tool. So please do that. Now, you must have less than 100 total members, that's actives and retirees, to use the tools. And let me show you what I mean by that. I think maybe a better word to use is subscriber. See, a single employee obviously would be 1 member, 1 subscriber. An employee plus a spouse, see, that's still 1 member, 1 subscriber. An employee, a spouse, 17 kids, cats, dogs, whatever, that's still 1 member. Obviously, a retiree is 1 member. A retiree and a survivor, still 1 member. And if the retiree has passed on, the survivor is 1 member, you know, 1 subscriber. So you can see, I mean, I've got a lot of people listed there, but that's really only 6 members. So you should be able to keep it under 100. And do this based as of the beginning of your year. I mean, I don't want you to not hire people during the year because you're afraid you'll go over 100 a year. And no, just always make this determination at the beginning of your reporting year. Now, membership is determined for the employer as a whole, okay? No subgrouping. You can't say, gosh, I've got 150. I think I'll divide it in 2 groups of 75 and run the tool twice. No, that doesn't work because the results can be manipulated by the way you group people. So that can't be done. You have to look at the employer as a whole. So let's go back to our tips here. Okay, another one. you have to gather your data. What you're going to need is the average ages of people, because you're going to group those into age groups for the tool. Now, when it comes to retirees, I know LEOFF1, obviously you know who your retirees are, but a lot of the PEB employers say, we don't know who our retirees are. Well, don't worry. The healthcare authority knows that, so you just have to ask them. But you can't just call them up and ask them, okay? Only people who have secure access to the Health Care Authority website can get in there and exchange data with the Health Care Authority. I mean, you can understand that. This is confidential data. So probably someone, either payroll or HR, has a sign-in authority to the system. It's called FUSE. Because, if someone new comes to work for you, you have to notify the healthcare authority. If someone, has to add a dependent and all this, it's all done through this secure system, secure access. So whoever that person is who has the sign-on, tell them to go here, and they're going to ask for your retiree data. You can see in that yellow box I've highlighted, that's there's some various standard queries in there. This one isn't, so just select Other in that drop-down box. And in the white box, just say something along the lines of, I need a list of my retirees and their birth dates so that I can figure out my OPEB liability, something like that, because, they get a lot of these requests. They'll know what you're asking for. And then the healthcare authority will, get that data and send it back to this person through a secure file. And that's how you get your data. And let's see, finally, I think I got another couple hints here. Now, you're going to enter the data into the cell. You just modify cells, okay? Don't delete any. I had that happen last year. Someone said, well, I didn't have anything to put in that cell, so I just deleted the whole thing. I guess she didn't like seeing the 0 in the cell, and it messed up the formula. So I'm pretty sure they have fixed that problem with the tool. But yeah, just don't try to delete anything. You'll select an excise tax option, yes or no, and I'll talk a little bit more about that. And then you click on the Calculate button, and you always click on the Calculate button. If you go back and make a change, you have to recalculate. I've had people call up and say, oh, I had to make these changes, got updated data, but nothing changed. Well, you got to hit the Calculate button. Okay, let's actually do one here. Okay, I'm going to start with the PEBB tool. Can we see that? Or do we have any questions at this point, Stacy?
Yes, Deborah, I do have a few questions for you. So
Let's do before we do this then.
All right, the first question is on the LEOFF1 tool, do I need to worry about the excise tax option?
Oh yes, and I'm going to show you that right now. So I wouldn't say worry about it. You do need to make a decision, but no worries.
So a secondary question of that is, we know that it was repealed. Does the SAO have guidance on whether it should be used or not?
Nope. We don't have any guidance on it other than it's going to be a management decision. So why don't I run through the tool and just, because I'm going to discuss that right here. Okay, I've actually got some actual data from someone. Now, when you open the tool, it comes to this intro and data inputs tab. And you can see that's the data you needed for both your active and retirees. See, we're going to group them. How many do we have in each age group, and what's their active age? Okay, so I've got some actual data here. And in fact, you know what? I'm going to make a mistake here. See where it says here, I'm working on the age group 47 to 56. It's asking me what's their average active age. Let's say I make a mistake and say 57. See? It won't let you put bad data in there. And there are several edits like that in this tool. You see, this is a good example of the problem we had last year. Say, I don't have anyone in the 20 to 64 age group for retirees. And last year, someone had tried to delete both those cells, the number inactive and the average inactive age, and it messed up the calculation. So yeah, don't ever try to delete anything. Just modify these cells as you need. Okay, I think we've got it all in there, but you know what? Let's make a mistake. Okay, obviously, if that's 222 instead of 22, I'm going to have more than 100, right? Look at, see, wouldn't let me calculate. Says you got to have less than 99 or less altogether. So let's fix that. Now, a couple other things here. I said we have annual covered payroll. This person knows there, so I'm going to put it in there. You have to have something in there. Remember, this tool is used not only for cash basis, but for GAAP also. It's used by everybody. And GAAP entities need that figure for some statistical information that they report in their financial statements. You could put $1 in there if you want. It'll still run. But I think it's interesting to actually put, if you can, the covered payroll, an accurate number, because it gives you, what percentage is this total liability of your annual payroll. I'll show you that on the results, which can be an interesting bit of information. Now, if you know your beginning total OPEB liability, put it in there. If not, the tool will calculate front and back, so don't worry about that. Incidentally, neither one of these numbers, the annual covered payroll or the beginning total OPEB liability, neither one of those affects the calculation of the ending liability. So don't worry about either one of those numbers. Okay, let's talk about that excise tax, the high cost excise tax, also known as the Cadillac Excise Tax. You've probably been hearing that for years. It was a tax on high cost plans designed to keep those plans for, executives and stuff from being so much better than everyone else's. And it's been around for years, and they kept extending it. I think originally it was going to be effective in the early 2000s, something like that. But anyway, this last December, I believe it was the 18th, the Congress repealed it altogether. And of course I said, yay, let's get rid of that in this tool. And the actuary said, well, the measurement date on my tool, on the valuation, is June 30th, 2019. And this happened afterwards. He said, so I don't want to take it out, but it's up to people to decide, do you want to use it or not? So you see down here where it says, do you want to include excise tax in your reporting results? There's a drop-down box. Just decide yes or no. I know the yes is the default, but go either way. And in fact, we'll calculate both ways and see how it affects our liability. But we got all our stuff in there. So let's calculate. It calculates, jumps to the GASB results tab. And you can see there's your ending liability, line 15, the $2,351,898. You need that figure. And up here where it says on line 10, where it says benefit payments, you're going to need that for your notes. But now, I want to go back and I want to show you. Remember that number, the $2,351,000. Let's see how much that excise tax actually affected us. Nah, not much. Yeah, see, it doesn't make much difference. But anyway, the default is yes. And that's because, accounting standards say that you always report as the facts and assumptions as they exist at the time of reporting. And since the measurement date is June 30th, that's why it's in there. But it's a management decision. You go either way, do whatever you want. Okay, I am going to go back to our presentation here as I want to talk about some other things. Do we have any questions at this point, Stacy?
Thank you. You did answer the excise tax option. The other question is regarding the 100 members or the 99 members and less. Can you go back to the slide that showed us how we determine that?
Okay. Let's go back to that slide, couple back here. Okay, let's look at that again. You see a single employee, that's just one member, even if they, and then an active employee or retiree is obviously one member, and then it doesn't matter how many dependents, survivors, spouses, kids, all that, none of that member matters. That's just one member because it's one subscriber.
Thank you.
Another question. The purpose of this is only to decide, can I use the tool? And you make that determination as of the beginning of the year.
Thank you, Deborah. Another question is on the covered employee payroll. That question is, what exactly does that mean? Is it my gross payroll of all employees or my gross payroll of only the OPEB covered employees?
Yeah, it's only the employees who are members of the plan. And when it comes to PEB, remember, everyone who is eligible is who is counted in that total. I mean, and that's the way you get billed from the healthcare authority. You can't have people say, nah, I mean, I know I'm eligible, I don't want to be a member. Maybe they have a spouse, they want to be a member of their plan. Those people, you still get charged for those people as the employer. So it's everyone who's eligible for the plan. And as I say, for you, since if you're not GAAP, that amount is not as important. You could put $1 there if you want, but I think it's important to get it as accurate as possible, because let's go back and look at our results here. Now you see there's our liability. I said you need that for Schedule 9, but look at that underneath that very bottom line. The total OPEB liability as a percentage of covered payroll. See, that's what that's for. That's just a bit of statistical information. It doesn't affect anything, but it's kind of interesting. You know, there are some states where, gosh, it could be 300–400% of your annual covered payroll. But anyway, the two numbers that you need, this is for your notes, you need that the ending liability and also benefit payments. Now, you're probably looking at benefit payments and going, well, wait a minute. I paid a heck of a lot more to the healthcare authority than only $27,000, right? The benefit payment, it's only the subsidy, the explicit and implicit rate subsidies, the OPEB benefit. That's why you're going to report in your notes. See here in the note where you say, you know, our total OPEB liability was, there's your number, and the CDR County, whatever, contributed so many dollars. That's where you put the benefit payment, say. And then when we get to Schedule 9, we're going to do just like we did with pension liabilities. First year, if you got a zero balance, we know what our ending balance, what we want it to be, so we'll just make an addition for that amount. Come next year, we know what our beginning balance was. You'll run the tool, you'll know what your ending balance is, so just make an addition or reduction, you know, plus or minus, to come up with the right ending balance, and just keep doing that year after year, just like you do with pensions. So do we have some more questions at this point?
I do have a few more questions for you. In regards to the covered payroll also, do we include any pension payments in that amount?
No, it's none of the employer's costs, it's just payroll. You know, my gross wages.
Thank you, Deborah. I do have some Schedule 09 questions.
Okay.
One of them is, what actually gets reported on the Schedule 09 from the tool to the 09 exactly?
Okay, well, let's go back and look at the PEB tool. See, on that line, total OPEB liability ending. And you can see, even though we had a zero beginning balance, it calculated a beginning one. But that's just what the tool does. It backs into one. You don't need to do that the first year or any year, because whatever the beginning one, it doesn't affect the calculation of the ending. But see, you take that ending liability, that's what you report on Schedule 9, like we did here. Just like with pensions, you know, you have a way, a tool to calculate what your pension liabilities are each year. You know what you want to end up with. You know what you started with. You just do a plus or minus to get to the right ending balance.
Thank you. I have a clarifying question on the beginning balance. If I have not reported OPEB before, is my beginning balance 0, or do I use the beginning balance calculated in the tool?
Use 0 if you've never reported it before.
So I have another question related to the beginning balance. If I reported an OPEB amount in 2018 on my Schedule 09 from the calculations of a different tool, do I still use that amount as my beginning balance for 2019 using the new tools?
Yeah, if you had a balance from last year, make that your beginning balance. When you run this tool, you'll know what your ending balance, what you want, and just do a plus or a minus to end up with the right ending balance.
Thank you, Deborah. Those are all the questions I have for you at the moment.
Okay. Let's do the left tool also, because it's just a little bit different. Ah, there it is. Okay. Do we have that up on the screen now, the left tool?
Yes.
Okay. Looks a lot like the other one. Let's get down here where we do our data inputs. Now, obviously, you left one employers, I mean, you know who your retirees are, how many you got in these categories. This tool pretty much, you know, you don't have to have active and retirees. Incidentally, as of June 30th, 2019, there were only 20 active left one members. There were only 20 of them still working. The city of Seattle had 10 of them, so most of the others I think were gap. But heck, there is a chance that somebody, one of you out there, has an active left one member. But don't worry, you're just going to put everybody into both actives and retirees into the same category. We don't have to separate them here. So we're going to do the same thing as on the other tool. Just enter our data. And this is actual data from somebody. Now, annual covered payroll on this one, you can leave it 0 because let's face it, everybody's retired. There shouldn't be any annual covered payroll. He left it in there in case somebody had somebody working, but there are no contributions to the left one plan, so retired plans. But anyway, yeah, if you had some covered payroll, you could put it there, but you could just leave that as 0 on that one. And once again, you can put your beginning total OPEB liability in there if you want. If you knew it, if not, that's okay. And once again, you decide on the excise tax, yes or no. In fact, I'd like to do it twice. When you do it both ways on this one to see what the results are, I think it has a bigger effect on this one if I understand right. You just calculate. See on this one, there's our ending OPEB liability, and we have some estimated benefit payments. Okay, let's remember that number because I want to see how much difference it makes with this one. Okay. A little bit, so not really that much of a difference, I don't think, with or without. And of course, next year it'll be gone anyway, so who cares? But it's up to you to decide if you want to include it or not. So looks pretty much the same. We've got our total OPEB liability ending. That's what you're going to report in Schedule 9. But if you go up to the benefit payments line, notice it says estimated benefit payments. It's a little different when it comes to left one because you know what your benefit payments were, right? Remember, these tools are based on an evaluation of the state as a whole, facts and assumptions for the state as a whole. They have no way of knowing, the tool has no way of knowing what your actual payments were, but you do. So when it comes time to do your notes, let's go back here to the slideshow. There's our results. See, your estimated will probably be different from your actual. Go ahead and use your actual in the note if you know it, most people do, because I think that's more accurate. So you'll say my total OPEB liability was, and my actual contributions were so much for the year. So do we have any questions there?
Thank you, Deborah. I do have a question. If I have both PEB and LEOFF1 plans, am I required to report the 2 liabilities as 1 line or 2 lines on the Schedule 09?
Well, you're only required to report 1 line, but I think that's very interesting. So, you can report them separately if you want, because, they're probably going to behave differently. The LEOFF1 liability obviously is going to go down. People just get older, they're all retired, their lifespan is shrinking. But the PEB one I'm pretty sure that one's probably going to mostly go up and can kind of swing back and forth depending on how many people you have. So yeah, you're only required to report 1 line, but if you want to report 2, go right ahead.
Thank you. In regards to the notes, do I have to use my actual expenses for the year that are related to the OPEB in the notes? And if I do, is that expense number different for my LEOFF1 than the PEB?
Expense, I'm not sure what that relates to.
So it asks for us to report actual expenses or contributions to the plan.
Contribution, yeah, it's not asking for your OPEB expense. It's asking for the amount contributed, which are two different things. Obviously, there's no way that you can know the value of your subsidy that you're paying without the tool. So that number you will get from the tool. But for LEOFF1, you do know your actual benefit payments, whereas the tool can only estimate. So I think it's preferable on LEOFF1 to go with the actual.
Thank you, Deborah. Those are all the questions I have right now for you.
Okay. Well, I think that was it. So I do want to, you're right, you know what? I do want to show you one more thing. I want to show you our OPEB webpage. Okay. This is our, for cash basis, you have your little OPEB webpage here. Good, we do have links to the Office of the State Actuary webpage. If you just click on that link, that'll take you right to where you can download the tools. The OPEB, the cash, the bars section, the note disclosures, the note templates, Schedule 9. And we've even got e-learning, which I think is going to be this webinar, isn't it?
That is correct, yeah. Yes.
All right, yeah, be sure and you go check out this webpage. All the information here that we've just talked about is there. And once again, if you need help, just contact us.
Thank you, Deborah. Actually, a couple questions popped in while you were showing our webpage.
Okay.
So one of those questions is, I'm just a little confused. Would you be able to explain the difference between the DRS plans and these OPEB tools, and do they relate at all?
You know, I think especially with LEOFF1, I get that question a lot. There's no relationship between pensions and health care in our state. I know it seems like there's a relationship because, heck, I mean, when you retire, that's when you start getting the OPEB, right? It seems like they're related. But no, the LEOFF1 pension plan is totally separate from like the LEOFF1 as the requirements that you have to provide OPEB to your LEOFF1 retirees. So DRS can help you. There's nothing related at DRS to OPEB. It all comes through like the Healthcare Authority and individual employers. So PERS is not related to PEB, and LEOFF1 retirement is not related to LEOFF1 OPEB.
Thank you, Deborah. What do I do if I have pre-LEOFF1 plans?
Well, it turns out that this valuation, this LEOFF1 valuation includes the pre-LEOFF people. I know there's a handful of them still out there. So yeah, just add them in when you're doing the tool.
What do I do if I have a different type of OPEB plan that's not covered by these tools?
Contact us right away and we'll evaluate it, see what kind of plan you have, and see what we can do to come up. Because you know, without these tools, you can do the alternative measurement method, you know, that big spreadsheet on your own, or you can get a professional valuation.
Thank you, Deborah. I have a question about defined contribution plans. And since we didn't really cover defined contribution versus defined benefit, before I ask the question, can you provide the difference between defined contribution and defined benefit?
Yeah, a defined contribution plan is kind of, I think of like a 401k or deferred compensation where, you know, individuals have an account and whatever money that was put in after you retire, that's all you can get out. Nothing else goes in after you retire. And plans like that don't result in a liability because the employer isn't providing anything after you retire, anything post-employment. It's the kind of defined benefit plans where, you know, what you get after you retire depends. It's usually things like, well, like with OPEB, you know, LEOFF1, you're providing this benefit after people retire. It's a defined benefit. And that results in a liability. So just because you have a plan doesn't necessarily mean there's a liability. That's why we need to analyze it. If it's a defined contribution plan, Just going to be a note disclosure and no liability to calculate.
Thank you, Deborah, for that. So just to confirm then, for our defined contribution OPEB, the question was, what do we need to do for these? Do I have a liability, and what are my note disclosures?
If it's truly a defined contribution plan, yeah, you have no liability, and just follow the defined contribution note disclosure. I don't know if we have one specifically for OPEB, but we have one for defined contribution plans.
And then I have one final question for you, and this is related to LEOFF1. We have LEOFF1 members that we pay their Medicare premiums. Do I need to add these to the liability calculation for LEOFF1?
So you have LEOFF1, there's retired, and you're paying their Medicare premiums. Yep, that's OPEB.
So do they need to add those to the liability calculation on the LEOFF1 sheet somehow?
Oh, the dollar amount, add the dollar amount. No, that's all taken into account in the valuation. So you just have to, you put the number of people in there and run the tool, and that gives you your estimated liability. Remember, this is just an actuarial calculation. It's an estimate, that it's a moving target that changes constantly over time. It's just an accounting estimate.
Great, thank you, Deborah. Those are all the questions that I have at this time for you. And just to follow up, we thank you for attending this webinar on OPEB for cash basis governments. If you have any questions on your OPEB plans, please reach out